I'm Mike Carr. Thank you for joining me for a look at an answer to an important question that many traders, both new traders and older traders, have. Can I make money using RSI, a very popular momentum indicator? Now, if you like seeing answers to questions like this, please consider subscribing to my YouTube channel, as I will have additional videos like this in the coming weeks. To start with, let's just review what RSI is. It's a momentum indicator. That means we're looking for moves that are unsustainable. So when prices move up too fast, we say that they're overbought and we expect them to decline. When prices fall suddenly, we say they're oversold and we expect a reversal to the upside. RSI quantifies this relationship. I'm not going to go into the formula because it's just not needed. RSI is available on a number of websites, and the formula isn't really helpful in deciding whether to use it or not. Values below 30 are considered oversold. When we get above 70, the traditional interpretation tells us to sell. So here's an example. Here we have a signal. It's above 70. We see that had we sold, well, we wouldn't have missed much. We actually, had we stayed out of the market long enough, would have had a nice little return. Got a buy signal. Didn't amount to much, maybe a short-term signal. And then we got a nice buy signal here at the absolute bottom. Sell signal here. Again, we wouldn't have missed much, but it's very difficult to tell whether an indicator is useful or not by looking at a chart. However, that is how most people do it. I put it to the test. I used 15 years worth of data, stocks in the S&P 500, took all the trades in the test, and what we see are the results. This is buying when RSI gets above 70. Remember, that should be a sell signal. Since moves above 70 are supposedly too far too fast, we should see losses in this column. We do not. We see gains. The idea is buy when RSI gets above 70, sell X days later, X being the amounts in this column. Win rates, not bad. Average trade size, these are pretty good gains. These are better than average gains. And this is coming when RSI adherence would be telling us we should be afraid. So what we see is RSI should not be used as a sell signal using the traditional rules. We still need to test, though, whether or not it can be useful on the other side. But what we find is simply when stocks are going up, they have a tendency to keep going up. And selling when RSI gets high, you're going to miss out on all of the big wins. So definitely RSI not suitable for selling. What about for buying? Here, we do see some usefulness. Again, not bad on the win rates. Same setup. We're buying below 30, selling X days later. Average size of the trade for 10 days about average, but we're doing pretty well over the longer runs. So these signals could be considered useful. Based on testing, what we find is RSI 14 really shouldn't be used. It's not going to give you a big enough advantage to consistently beat the market. Can we fix it? Well, on this chart, I have the traditional RSI calculated with 14 days, and I'm adding in a 2-period RSI using just 2 days in the calculation. Testing shows any value less than 5 gives you similar results to what we're going to look at here. Let's say we buy when RSI 2 falls below 10. We see that we get better test results in the sense that we have larger wins. Percentage of wins about the same as with 14, but the size of the wins a little bit better, pointing us to the idea that maybe using a 2-period RSI is going to be more successful than a 14-period RSI. This chart shows what happens at various rules. So in the first line, I'm buying when RSI 2 falls below 5, selling 10 days later. Here's the win rate, average trade size. Here's our benchmark. What we do notice is a couple of numbers jump out here, and it looks like this could be a tradable edge. For example, this last column here, RSI 2 greater than 99. I buy, I sell 10 days later. Win rate doesn't look impressive, but the average trade size, I'm going to gain an average of 2.6% in just 2 weeks. That's not bad. And that's the conclusion on RSI. It shows little value as a mean reversion indicator. Don't sell because it becomes too high. When it gets high, it's telling you the likelihood of a trend is stronger than the likelihood of a reversal. Extreme values of that 2-period RSI can provide winning trade signals. You could simply, you're not going to get many trades, but you could wait for RSI 2 to go above 99 or below 5, buy on either of those conditions, sell 5 to 10 days later, 5 trading days in a week, so 1 or 2 weeks later. That's all there is to successful trading. Study your indicators, learn whether they work or not, learn how they work and through testing, and then trade your edge. Thanks for joining me. I do hope you found this to be useful. And if you did, please subscribe to my YouTube channel. Thank you.